All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, December 30th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis, wrapping up a really good year this year. I think over 25%, if I'm not mistaken. Yeah, 25.65% gains in the swing trading service. That's just with common shares, guys, so no options there. A couple of options, but I know a lot of my members do use options to leverage my trades, but 25% gains on the year, and NASDAQ down something like 30%, so I'll take that. Pretty nice year here, wrapping it up, ready to see some more gains in 2023, which I think will be a much even better year than 2022. Anyways, into the markets here. So JPM wins, so give them a golf clap. And of course, I'm referring to the collar trade that everybody knows about by now. So that's 38.35. And I'm doing this video a little bit early here today. I don't expect much to go on here. I mean, you can see we're just a lot of whipsaw, and they're clearly pushing us down below that 38.35 area. You see we're 7 points below it. I don't expect much more fireworks to go off by the end of the day. Next week is really when I'm expecting the movement here. You guys know I'm calling for some type of January effect rally, particularly with the NASDAQ. I think NASDAQ stocks have NASDAQ and Russell. So look at the IWM there. NASDAQ and Russell have the most upside, more so the NASDAQ than anything. All these beaten down growth stocks that have been the victim of end of year tax loss selling. So that's what I'm expecting. Wouldn't be surprised to see a gap and go, honestly, next Tuesday. I know the markets look soft right here, and this is definitely not a pattern of strength. I've seen this chart a lot on, FinTwit, on YouTube a little bit. And for what it's worth, a lot of people are calling this a bear wedge. And for what it's worth, it is. I mean, you have a down move, and then you've got inside chop there. The problem is that I have with this pattern is, it's there, but you got to look at circumstantially. First of all, if we consider circumstance right now, tax loss selling, lots of end of year stuff going on, as well as the JPM collar trade just pulling us down. So take that into consideration, but also just the technicals. You got to use the bigger time frames. I always preach that. You guys know that. I talked about this all the time. All we really did is just go down and test this green bar. And for right now, we're holding up just fine. We had a little doji here. And this week has been kind of an inside candle here. So there's nothing to say, if we closed below 373.61 on a weekly close, then all bets are off. And this is a failure, and we're going a lot lower. I think, a lot of traders get stuck into this daily time frame, and they just assume, okay, that's bear flag, we got a short. And you got to look at those bigger time frames because they tell you a lot. Another thing is that, yes, the spiders and even the Dow, the Dow also has kind of a little bit of a bear wedge there. And the Russell, for that matter, down move, sideways action. But take a look at the triple Qs. This is down and essentially straight down with no bounces. So this is getting a little bit, one-sided, and you're into support, critical support as well. So QQQ has been my master, QQQ 260 has been my master level for a while now, since really October. And that goes back obviously to the September 20th pivot in 2020. Excuse me. So that level so far has been defended. We have a little inside day here. By the way, the triple Qs have not made lower lows today. So showing a little bit of relative strength. That is generally a good sign. Same thing with the semis. Had a pretty weak open, but they have made higher lows since then. So you guys know I like to see that as a leading indicator, as well as what I mentioned yesterday. If you look at the Qs here, we're only 10 points or so off of 52-week lows, whereas the semis are, well off the lows, still a 50% fib retrace. That 50% fib is still holding. So I do think that is a positive going into January, and I think that's something constructive here. Now, will this be a major rally? I don't think so. It'll be a tradable rally, but I don't think it's going to be anything more than the next sell opportunity. So we'll leave it at that there. But for right now, markets are under pressure. We're probably going to close below 38.35. I'm doing this video early because I honestly don't think anything else would happen. And if I did, then I would wait till 4 o'clock like I usually do. But yeah, that's what we're looking at right here. I do expect a rally in January. You guys know that, particularly NASDAQ stocks, particularly the beaten down growth names. Anyways, we mentioned the other indices. So semiconductors, again, holding that 50% fib, holding the 200 handle. We'll see how that shapes up next week. I do think these get a bid as well. Resistance will be at right around 214.50, maybe 215 even. Triple Qs here. I don't know if you guys can hear the cat clawing on my couch, but yeah. Trying to upstage the video. Anyways, I want to mention the triple Qs here, 280. That is an upside target there, potentially, for this rally. And that could coincide with that 215 handle there on the semiconductors. IGV, inside day here, down 1.15%. Again, let's not make too much out of it. I wouldn't be surprised to see this take off to the upside. There's a lot of beaten down cloud names as well as semis, and I do think these are the beneficiary next week. Transport's definitely on the weaker side. We have to point this out. Now, this is a problem because barring a absolute ripper in the next hour, this is going to fail. So this is a failed. I'm just going to call it now because it's not going to happen. This is a failed inside bar on the weekly. So that is a major, and I mean major, sell signal. These things tend, with the transports, it usually takes 2 to 3 weeks for this to play out. So that doesn't mean the market's going to crash on Tuesday. Again, otherwise, I wouldn't have just said I think we're going to rally. But it does take a few weeks to play out. And if you guys remember, I know I've beaten this into the ground, but I'll say it one more time. Lower highs in the transports, and the transports, remember, they broke that Powell pivot there from 11:30, right? Not pivot, but that Powell press conference. That when that happened, it took about a week or two for the market to start to break down. So the transports are a leader here, and they're telling us that there's problems ahead. That doesn't mean we're going to go straight down. I still think we can come up and make a lower high, maybe test the 200 moving average again. But this market's in trouble. So that is, definitely don't ignore the transports. Said that before. I'll say it again. But that is definitely telling us something. Again, doesn't mean we don't rally here in the next couple of weeks, but that is a leading indicator moving forward. On to interest rates. They were kind of all over the map today. We did have an auction that pushed yields all over the place. Came right back up to basically where we were before then. 10-year, I still think has a little bit more upside here, maybe to that 40 handle on the TNX. TYX, I'm still looking for about 40.50, and it can definitely get there next week. We'll see what that does. But yields are holding up pretty well. And the 2-year, again, I told you guys that inside bar, as soon as that went, the 2-year has, given up a lot of ground. It's trying to hold that 50 moving average here, but this does not look good. If interest rates start to rise again, it's going to be you'll probably see panic because the market's already trying to price in a pivot and trying to price in, rates have peaked, inflation has peaked. If the 2-year starts selling off, it's going to get ugly quickly. So be careful with the 2-year here. It's telling us stuff right now. Again, that was the first sign of weakness there, and I don't think this hidden versus head and shoulders is going to play out at this point. So we'll see. We want it to stay above 102.258, which is right here, this green bar low. If it can hold that, maybe it can hang on a little bit longer, but this is not a good looking trade right here on the 2-year note. Over to home builders, again, nothing really too new to update there, but we do have still a really good pattern here on the XHB weekly. Inside bar, nice narrow body candles inside of that. I like this for another move up here. And ITB, same thing, although it's a little bit sloppier and it's kind of moved up a little bit more. But these, I think, again, I'm looking to short these next year, but these still have a nice pop left in them, if you ask me, and they're holding up really well. So we'll give them the benefit of the doubt for now. VNQ, again, it looks like they're going to save this green bar low, 80.86 on a weekly close. Eventually, this is going lower. You had a rejection of the 20-week moving average twice, regardless. So this is not in good shape. And then, of course, that inverse head and shoulders failed a week or two ago. So this is not in good shape. I would avoid the real estate equities. XLF, again, not too much going on here. Still has that kind of bear wedge look like a lot of other things. Again, this could still rally up, though, if the market gets a bid in January. But again, financials, I do not like going into 2023 either. There's broker dealers there as well. You see that bear wedge as well on the XBD. This wants to go down to 420 in, I would say, probably sometime, maybe not immediately, but at some point in the next quarter, and possibly even 400. So that's my analysis there. And anyways, crude here up 2.6%. Nice little pop here into the close. And actually, the future is getting a nice bid too. So kind of strange to see them sneak. I didn't see any news come out. Maybe there was, but interesting to see them kind of sneak this little bid here in the last couple of hours before the new year. You could potentially put in, maybe an inverse head and shoulders if you do kind of come back down and push up. I still think crude is going to be under pressure, but at least for quarter one. I think the narrative of recession is really going to get to it. And I just never, like I said, I just never really saw a bottoming signal down here. Usually I'm pretty good at finding those, but I did not see one there. But who knows? If it puts in a constructive pattern, nothing to say it can't go higher. I'm a little bit more neutral on crude futures. XLE, again, hanging in there. This is still resistance here. Again, you guys know I'm looking for kind of a rotation from energy into tech for the first couple of weeks of January, kind of a window undressing trade. I still think energy is in backing and filling mode. You see the XOP there, same kind of bearish pattern there on the daily, and OIH trying to get above this trend line. It's holding up well, but don't be fooled. Don't chase this up here. This will come in as well. Nat gas has a little bit of a, I pointed this out to members. We have like a little bit of a 4-hour kind of wedge here. Falling wedge potentially, and nat gas is grinding lower. It does look like it's a little oversold to me. I mean, taking a look here, it was $7 literally 2 weeks ago, and it's at $4.50 now. That's a pretty tremendous fall. And we also have kind of a trend line here that I'm watching, which it's just ever so slightly below right now. And that goes back to this pivot high in 2021. So we'll see if maybe this gets a bounce next week. I do think it's pretty oversold, all things considered. But yeah, nat gas taking a hit. It's pretty nice out right now. I live in Western New York, and it's 50 degrees. And I actually have a window open right now. So that's definitely putting some pressure on nat gas in the near term. But it does seem a little crowded down here. Anyways, dollar index finally made, I don't know, did it actually get to the lows? It looks like it did. So 103.44. Yep, so we just made 103.39 was the low. So we made new 6-month lows on the dollar index again. I'm still looking for kind of the 102 handle on this. We'll see what that does, but dollar index under a little bit of pressure. I think it has one more leg down, and then I think we'll have a pretty good buying opportunity in the dollar if you ask me. Gold also up inverse to the dollar. Up just 10 basis points, though, nothing crazy. I still think this has another little pop, again, to 1875 or so. And then silver also putting in a little bit of a daily inside bar here as well. And I think that's setting up for a pop to 25. I would not be a buyer up here, though. It's too extended. It's too overbought. It could easily put in a type of rising wedge. You can see here, you kind of have like higher lows right there. If it starts to make a higher high in this kind of a fashion, that's going to put in a rising wedge, which is a bearish reversal. We'll probably get down to 22 before you know it. And then again, just to visualize, this trend line goes back to February 2021. So I just think there's a lot of resistance up there for silver, and it is already overbought as it is. So be careful with it. Platinum, what can you say? Like I said yesterday, I should have just taken my own advice and went long at this trend line. Nice move there. It's holding up really well. Let's take a look on the weekly here. That's a strong weekly pattern. It'll probably run into some resistance around 1125, but it's got a nice little pop in it this week. And what can you say? I've been telling you guys, I've been on this since late summer. I've been saying platinum's the best metal right now. You want to be in platinum. That's the one to buy dips on. We got that beautiful W bottom and nice wedge pattern, little consolidation pop. Nice move there for platinum. Maybe I'll actually buy the next pullback. We'll see. I've traded it twice this year, though, so we made some nice money. But yeah, platinum holding up really well. Then copper here, again, just kind of an inside pattern. Still inside on the weekly, though, so just be careful with it moving forward. Bitcoin, let's flip over here. Actually, first, per request, I'm going to cover the German DAX. So this is something a little bit new here. I'm going to cover the German DAX, Euro 50, and the UK 100. Although the DAX and the Euro 50 are kind of the same thing here. I'm going to try and do this maybe on Fridays or maybe on Mondays or something like that, just once a week for the Euro, my friends in Europe. For the DAX, I did some work on this. I do think this wants to go test 13.5. That's going to bring you down to this green bar low. And if we take a look on the weekly, there's that green bar low there as well at 13,391. So that's an important level. If you get a weekly close below that, this thing goes a lot lower very quickly. But for right now, I think it probably wants to test, 13.5, that pivot high right there. That's where you broke out from. And then we'll see what it does from there. And then the Euro 50, it pretty much just lines up the same way, right? So 3,700, you see that pivot right there, 3,760, 3,770, right in that area. And then to flip over to the weekly, you don't want to see a weekly close below that low, 36.65. So those are your levels to watch on the Euro 50 and the DAX. For the UK 100 FTSE, I think this might have topped. So this area here at 7,600 is very strong resistance. It is putting in nice daily chart consolidation, so it's got a nice daily inside bar. That's actually pretty decent, above the moving averages. I like that pattern. I just don't see it getting much through 7,600 right now. And if it does, then you go up to, double check my notes. If it gets, okay, so yeah, if it gets through that, then it can go up to 7,800. But I don't think it gets, I'm not sure it gets through 7,600. I think it may have topped out. But for right now, those are the levels. If it closes below this green bar low on a daily basis, that's a failed pattern, and you're probably going to go back down to 7,100. But for right now, it's holding up okay, so we'll leave it at that. Bitcoin, lastly, again, nothing too new to add here. You do have a micro inside bar. This has been really a dog, though. I did hear, I want to say yesterday or the day before, that Bitcoin volatility is at an all-time low, like since its inception. So that is significant to me. That tells me there's probably a big move coming, and maybe that's the catalyst for, or something happens and there's a catalyst for that move back down to that 10 to 12,000 area. So again, that's going to go back right to this breakout, which was never back tested. So it should get hit. The only thing is, do we get a January effect with it, being kind of a retail darling that's been under pressure due to tax loss selling. So anyways, let's flip back over here to the spiders. It's 3:08 p.m. I don't expect a whole lot to go on here. Yeah, we're getting a little bit of a micro pop. Let's look at the book map. Yeah, so look at where they're keeping us. So 38, 36. This is where all the heat is. It's kind of obvious, right? 38, 35s, they're at the level they've got. So would it surprise anybody if we close like pennies below that? Absolutely not. Overall, I'm still looking for a move next week and into the new year. And so we'll see what we get. Anyways, guys, going to wrap it up here. You guys take care. Have a great, safe new year. Come find me on carnivoretrades.com. Talk to you guys all next week.